Welcome back to the exciting world of decentralized finance. Today, we're diving deep into one of the most sought-after and rapidly evolving careers in the crypto space, the DeFi analyst. A role that's becoming increasingly crucial as the DeFi landscape expands. DeFi, or decentralized finance, what exactly does it mean? It's a revolutionary new financial system built entirely on blockchain technology, cutting out the need for traditional banks and intermediaries. It's a fast-growing and dynamic world where you can lend out your digital assets, borrow crypto assets to leverage your positions, and earn interest on your crypto holdings, all in a seamless and digitally native environment. But with such rapid growth and innovation comes inherent complexity. DeFi is filled with intricate protocols that govern how these systems operate, smart contracts that automate agreements, and an endless stream of on-chain data that needs to be analyzed and interpreted. That's precisely where DeFi analysts come in to play a vital role. They're the expert guides who help both individuals and institutions navigate the complexities of this digital jungle. Instead of analyzing traditional stocks and bonds, they dig deep into decentralized applications, or dApps, various crypto tokens, and the ever-evolving landscape of yield farming strategies. Their primary job? To uncover exactly how these complex systems work under the hood, identify potential risks and vulnerabilities, and ultimately find promising investment opportunities for their clients or organizations. When a new DeFi project emerges promising sky-high returns, DeFi analysts are the ones who ask the tough critical questions: who is the team behind this project? Is the underlying code secure and free from vulnerabilities? And most importantly, are these promised returns sustainable and, real? They provide the essential clarity, objective analysis, and due diligence that the DeFi space desperately needs in order to mature and gain wider adoption. Without their expertise, we'd all be at risk of getting lost in a sea of hype, speculation, and potential scams. In conclusion, DeFi analysts are not just a nice-to-have, but an absolutely essential component for the future growth and stability of decentralized finance. So what's a day in the life of a DeFi analyst? It starts with scanning crypto news, Twitter, and Discord for the latest trends and security alerts. Next, they dive into research, reading white papers, analyzing tokenomics, and checking developer activity on GitHub. They test new protocols hands-on, using small amounts of crypto to spot red flags and understand user experience. Analysts build financial models to forecast returns and assess risks like impermanent loss. Finally, they communicate findings, writing reports, making presentations, or creating content for the community. It's a mix of deep analysis and clear communication. The role is fast-paced, challenging, and highly rewarding. What does it take to succeed as a DeFi analyst? It's a question many are asking as decentralized finance continues to explode in popularity. The landscape is complex and ever-changing, demanding a unique skill set. First, you need a deep understanding of DeFi protocols, really understanding the nuts and bolts of how these systems operate, how lending, specifically decentralized lending, functions within these ecosystems. Exchanges, both centralized and decentralized, and yield platforms work. You need to grasp the mechanics of automated market makers, liquidity pools, and impermanent loss. Risk assessment is crucial, absolutely essential for navigating the potential pitfalls of DeFi, spotting technical bugs, vulnerabilities in smart contracts that could be exploited, economic flaws, inherent weaknesses in the design of a protocol that could lead to its collapse, and team credibility. Understanding the background and reputation of the team behind a project is paramount. Analysts must read smart contract audits, not just skim them, and evaluate tokenomics for sustainability. Is the token model designed to incentivize long-term growth? Or is it a pump-and-dump scheme waiting to happen? Mastery of staking and yield farming mechanics is key. You need to understand the incentives and potential rewards, knowing how returns are generated and what risks are involved. What are the impermanent loss risks? What are the smart contract risks? Data analysis skills are a must. You'll be swimming in on-chain data, using tools like Dune Analytics to query and visualize blockchain data, Excel for quick calculations and data manipulation, or Python to extract insights from blockchain data. You'll be writing scripts to automate data collection and analysis. But it's not just about crunching numbers, it's about understanding the story the data is telling. Communication is vital. You need to be able to articulate your findings clearly and concisely, translating complex findings into clear, actionable insights for teams or the public. Can you explain complex DeFi concepts to a non-technical audience? Whether you're writing a report or making a YouTube video, breaking down complex topics, clarity is your superpower. It's what allows you to cut through the noise and deliver valuable insights. The best analysts blend finance, traditional financial principles, tech, understanding the underlying technology and storytelling, being able to weave a narrative around the data. That's what sets them apart in the DeFi world. It's a challenging but rewarding field for those who are prepared. Let's take a closer look at some of the top DeFi analysis happening right now. We'll explore how leading firms and protocols are leveraging data and insights to navigate the complexities of decentralized finance. First up, Delphi Digital. They are a leading research firm in the crypto space, widely recognized for their in-depth analysis of various protocols and digital assets. Their comprehensive reports consistently set the gold standard for quality and thoroughness in the world of crypto research. They provide invaluable insights for investors and builders alike. Next, we have Gauntlet, a firm that specializes in the critical area of risk management within DeFi. Gauntlet employs sophisticated simulations to assist protocols like Aave in optimizing their safety mechanisms and overall efficiency. Their work is crucial for maintaining the stability of these platforms. In essence, they are the financial engineers who are dedicated to making DeFi a safer and more reliable ecosystem for everyone involved. Now let's turn our attention to Yearn Finance, a well-known yield aggregator. Yearn's team of strategists who function as DeFi analysts are constantly researching and automating the most effective yield farming strategies available to users. They aim to maximize returns while minimizing risk. These diverse examples clearly illustrate the wide range of analyst roles that exist within the DeFi space. These roles encompass critical functions such as in-depth research, thorough risk management, and strategic planning to navigate the ever-changing landscape of DeFi. As a DeFi analyst, you could find yourself working at a dedicated research firm, or you might specialize in the crucial area of risk assessment and mitigation, or even contribute directly to building and refining strategies for individual DeFi protocols. Regardless of the specific role, all of these positions demand deep research capabilities, a strong understanding of risk assessment methodologies, and comprehensive DeFi expertise. The analysts working at these pioneering firms are actively shaping the trajectory of the future of finance. They're the driving force behind turning complex data analysis into tangible, real-world impact within the DeFi ecosystem. How do DeFi analysts spot winners and avoid disasters? They start by evaluating the project's core idea. Does it solve a real problem? Next, they investigate the team's credibility and track record. Tokenomics come next. Is the token's design sustainable? And does it incentivize long-term participation? Security is critical. Have the smart contracts been audited? Finally, they check community engagement and developer responsiveness. By combining these factors, analysts make informed, data-driven judgments. Risk assessment is at the heart of DeFi analysis. Smart contract risk is huge. Bugs can lead to massive losses, so analysts check for audits and bug bounties. Economic risks matter too. What happens if collateral crashes or yields dry up? Analysts model worst-case scenarios to test protocol resilience. Centralization risk is another concern. Who controls the protocol? Is governance truly decentralized? Team risk is real. Is the team public, reputable, and transparent with funds? Rug pulls and scams are common, so analysts dig deep into team history and project finances. By systematically evaluating these risks, analysts protect users and investors. Their skepticism keeps DeFi safer. It's all about protecting capital in a high-stakes environment. So, what's the payoff for DeFi analysts? Entry-level roles start around $70,000 to $110,000, often remote and flexible. With experience, salaries can soar to $200,000 or more, especially at top firms or protocols. Many roles include token bonuses, giving analysts a stake in the project's success. If the project thrives, those tokens can be worth more than the salary itself. As DeFi grows, demand for skilled analysts will skyrocket. They bring transparency, intelligence, and trust to a fast-moving industry. For those passionate about finance and tech, it's a chance to shape the future and build a rewarding career.